Good morning. It's Tuesday, June 3rd. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So a bit of turnaround Tuesday here with a sea of red in the markets overnight. Everything from the equities, the metals, the foreign currencies, some of the agricultural products are all under pressure. So looking at an overview of the general markets, the OECD, they slashed their global economic forecast due to President Trump's trade policies. They were citing that the impact of tariffs and uncertainty on confidence and investment. So the organization forecasts that global economic growth slows to 2.9% this year, with the rate of expansion expected to decline to 1.6%, and warns that protectionism is adding to inflationary pressures. So you look at the S&P 500, running into that kind of initial resistance here, pocket resistance 59.50, before backing off here and trading within about a 50-point range overnight. You've got it sitting in the middle of that overnight range here as of this recording. The high being 59.49.5, the low being 59.09.25. You look at the NASDAQ down 76 points, the Dow down 150, the Russell's slightly weaker at 2067, and the FANG's under just a bit of pressure. If you look at the S&P 500, 6,000's been this mark that we've approached about 2 times here, just recently about 4 trading sessions ago when they said that President Trump's tariff policies were illegal. And then you saw that rally fade off here as the appeals court tends to come in and the discussion about that and the other measures that they could take in order to implement these tariffs. The other big rally was that breakout rally where we gapped higher on that Sunday night on a U.S.-China trade pause of about 90 days. And then if you look at the S&P 500, we've been kind of trapped, coiling between that action here, between 57.50 and 6,000. So we'll want to see where this market kind of tends to hang out and where it's going to gravitate to. So you got strong support at the gap at 57.50, and you got strong resistance at that double top at the 6,000 mark. Now looking at some other markets here, though, one thing to note on the equity markets is that I saw Goldman Sachs, and what they had put out in a note was that after buying about $103 billion in global equities last month, they expect CTAs to be net sellers in almost every likely scenario globally over the next week or two. We do have a lot of economic data coming out, and we also do have the ramifications of what happens if some of these other policies are passed through or trade tensions continue to increase. That's where they could see U.S. equities start to come off here. So we're seeing the gold market. It is dipping as the dollar gets a little bit of strength ahead of some U.S. labor data that's going to help steer the Federal Reserve's monetary policy. We saw the gold market down about 0.5% as of this recording, 33.82, hit a high of 34.1780, low of 33.7560. So gold is coming off here, and this is natural after its biggest daily jump in 4 weeks on Monday. You look at the gold market here. The problem with the gold market, in my opinion, technically, is that you're still kind of in this bull flag here. Despite yesterday's major rally here from first pocket support, you're coming up to these resistance levels, these psychological levels, 3,400, and then it's kind of this pocket resistance, 3,380 to 3,400, where the market could just be making another lower high on the charts. So we really need to see this market continue to build upwards here and break out over some of these key levels here, like such as that May 6th high here where it totally failed right around that 34.80 mark. So once you could start getting above and making higher lows and higher highs, then you can confirm that the bull trend is back on, and we could target things like the all-time highs and 3,600 and other psychological levels. Now looking at silver market, it is taking a bit of a breather, down about 0.75%. That's down 26 cents here, and that comes after jumping to its highest level since October. So the gold market or the silver market gets you up to that next probable target. I outline all these in the chart pack, and it says that basically, you know, the market comes up to that $35, and if you talk to me on the phone quite often, they'll ask me what happens when you get to there. Well, that's where I'm standing at the altar, and I'm waiting for that silver market to come down the aisle, and what happens is that bride leaves me at the altar every single time. So it's just what it seems like is a repeating scenario, and it's kind of comical at this point. But if you can break out, if you can close over something like $36, you can get to $38. That's the top end of a parallel channel that's been going up here for the last few years. That's probably where we run into our next level of resistance. Above that $36, $38, okay, that's where it clears the air. And I think that sky's the limit, could be orbiting space at that point on silver prices. But in the meantime, you've got to deal with the reality, and the reality is there's some economic headwinds, there's some concerns about policy. These things impact silver prices, copper prices, and everything else because of the fact that this is an industrial metal and it takes industrial demand and things like that in order to get those prices moving a lot higher. It just doesn't break out to the upside and continue to go relentlessly. You're going to have some mining operations that are going to start hedging. You're going to have people that are individuals privately hedging, and it's going to have some selling pressure ahead. Now, looking at the economic data coming out, we do have factory orders, durable goods for April. We also have the JOLTS report for April as well, and auto sales for May. Now, the JOLTS report is one that you really kind of want to pay attention to. So the consensus is for 7.1 million job openings. This is on the last business day of April, and they're saying that it's roughly about 100,000 less than March. So they're saying there's currently one job opening for every unemployed person, and that's the lowest ratio in 4 years. The thing about the jobs opening is that if there's 100,000 less job openings in March, what happens is that businesses, they naturally start to contract when there's a lot of uncertainty, potential slowdown, things like that. They cut those job openings. The job openings, when they come down, that's a concern for the economy. It's not that those job openings are getting filled and then there's no, it's basically, it works counterintuitive of what you think. If businesses continually have job openings, it's because they're confident in what's going to happen in the future, so they want to open it up and continue to hire. When there's less job openings, it's not that they're getting filled here at an alarming rate, it's just that they are contracting on what they're doing. So you want to see that number expand and not contract, and if it's contracting for the JOLTS number, then that's going to be a little bit of an issue, and the Federal Reserve is going to pay attention to that. So we'll want to watch that. We'll also want to watch ADP payroll report, and then we'll also want to watch the non-farm payroll report on Friday. So again, the technicals on the upside on the S&P 500, 6,000. The technical upside momentum has been fading across all major benchmarks here, suggesting that it's going to take something like a change in that economic data or something, some clarity on some of these trade policies, some fresh news here, data to restart and push that market higher. Now, yesterday we did get some discussion where some of Chinese tariffs on certain goods and services would be delayed until August, and the equity markets got a bit of a rally on that. We trimmed some of the shorts with some of the clients that I'm working with, or prohibited from putting on additional shorts to see what happens overnight. But now that the market is a bit weaker, might start looking at attacking the downside again on some of the equity markets, with knowing that we have a hard line stance at that 6,000 mark. Now, looking at some other things here on the dollar index, there's been multiple calls and discussions. So I talked about this a little bit, where of a dollar collapse. So you saw, like, I don't know if it was Morgan Stanley or Goldman Sachs saying that there's a potential for like a 9% decline in the dollar index. So what they're looking at here is the foreign tax provision and a U.S. fiscal package that could trigger a 5% plunge in the dollar, a 10% sell-off in the equities if it takes effect. What's going on is you've got this tax package that Trump is trying to pass, and basically within it, you've got a lot of foreign entities that are able to buy things, are able to have access to our debt markets and things like that, and they don't pay taxes on that, where they're buying like 30 years, for instance, and they're getting a 5% coupon. They don't have to pay taxes on that, where you and I and things like that get taxed on dividends and all kinds of other things, on interest and everything else on your bank accounts. So what they would do is, this measure could lead to foreign outflows, and then it would run counter to Trump's policies and disencourage long-term investment in the U.S., and you could see that withdrawn. So that's where you get our bond market under threat again. You get the U.S. equities under threat, and basically, instead of attracting foreign inflows of capital and investment, you would have a dispersion of those two outflows. Now, getting into the gold market, down about $15 here, so really kind of trapped in a range again. If you look at that bull flag here, like I said, it's coming back up to that, and we try to probe above it, and then we're back below it. Now, the industrial metals here, copper sold off pretty aggressively in the overnight market. It was a private survey of China's manufacturing sector that fell to its lowest level since 2022. So you can see the mining stocks, they're probably going to come under some pressure here as long as the market holds these losses coming into the open here. So it's really that concern about the Chinese economic outlook, and it was a gauge of the country's manufacturing activity that fell to the lowest level in 2 years. You look at the ETF flows, they added about 120,000 troy ounces of gold holdings yesterday. They also added about 212,000 troy ounces of silver holdings yesterday, and that was the third straight day of growth in the silver market. So year to date, percentage change up 6.6% gold, up 3.5% in silver. The gold-silver ratio 98-1, so kind of butting against those recent lows here. And then you can look at crude oil prices, because even after the OPEC meeting, crude oil prices have been holding pretty strong here. They're up a little bit. You got a couple things. Goldman Sachs recommending that you hold some degree of crude oil in an account to fight inflation. And then also you do have these wildfires in Canada, which is countering OPEC's latest supply increase. The wildfires in Alberta have shut down about 350,000 barrels of heavy crude oil production, and that offsets most of what OPEC is looking to add to the market. So, excuse me, that's a bit of a rundown of what's going on in these markets here. I'll update the chart pack again. We'll see if this markets, if some of these can hold. Like I said, the silver market kind of coming up, testing that upside probable target. Gold futures kind of maybe falling back into this bull trap. S&P 500 really going nowhere. You're seeing the copper futures bounce off of kind of strong resistance. They had a green shoot through the resistance before backing off. Now they might have another 1-2 day decline and retest some of those support levels. Bitcoin futures retracing back, and now we're starting to form this kind of head and shoulders pattern. So we might see a bounce back up on the Bitcoin market, especially as you get a conference going on and things like that. A couple other markets on the radar, like natural gas prices, which surged significantly yesterday. We want to keep an eye on that. Some of the agricultural products also look pretty good as well. So you guys got any questions, give me a call or shoot an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.